There's never been a time where the entire human race had to deal with one problem. What we're going through now is the first ever global challenge. This is uncharted territory. No one knows exactly how to act.
Please join us for our next live stream Sunday, April 12th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, April 12th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates, and do give us a thumbs up if you like what we do. Again, we really do appreciate your support. We are happy to bring back one of our first guests on SBTV, Lior Gantz, the founder of the Wealth Research Group, known by his colleagues as the thrill-seeking entrepreneur. Lior loves researching businesses that are off the radar and are completely unknown to most financial publications. He's here today to talk about the quickly changing world we live in and the role gold and silver are going to play. It's time to saddle up and silver up with Lior Gantz. Lior, welcome back to SBTV. How are you doing?
I'm doing well. Thank you for having me.
Glad to have you on board again. Good to see you. A changed world. Lior, 2020. Incredible so far. Nobody could have predicted how we would see this economic activity end up being turned into a global slowdown. Borders are closed and people basically are shut out from work. How do you view this whole situation with the virus? Is it just the flu or something more serious that needs the collective effort to overcome?
Yeah, I think what happened in most countries around the world is that they confused linear with exponential. And still many countries grapple with this misunderstanding of how a virus that is about 10 to 30 times more deadly than a seasonal flu, how it can spread. I'm talking about the R0. The R0 is basically the rate at which a virus expands and gets transferred from one person to another. So for the coronavirus, the COVID-19, it's about 1.5 to 5.5. So in other words, every person, if left alone, would infect between 1.5 and 5.5 people. In order to lower the R0, what you need to do is basically make sure that people don't interact with each other, which makes this solution an economic disaster. So many countries grappled with the fact that, hey, are we going to do something unprecedented in human history, which is halt all of the economic activity in order to stave off the disease? And that's when the comparisons between a seasonal flu and the fact that it kills between 30 and 40,000 people in the U.S. every year, or heart disease that kills 400,000 people, or car accidents and everything like that. Those are average yearly numbers, linear numbers. They don't change that much every year. With an exponential virus that doesn't have any vaccine or drug yet, basically left alone, the entire world would be infected at some point, depending on the R0, and then it would be a matter of how much do we know about this disease, how many respirators, hospital beds, and staff do we have to treat the people that have a problem, and who is most at risk. So obviously those are questions that a government cannot answer, and therefore it has to go with the worst case scenario and say this is going to impact millions and millions, and we have to do this. And that's what slowly but surely all of them decided to do, is to enact social distancing, quarantines, lockdowns, etc. These are major questions that no one has had to deal with ever. There's never been a time where the entire human race had to deal with one problem. And major things are happening, Patrick, and I think that it's really important to understand that what we're going through now is the first ever global challenge that is being communicated on the daily to everyone. You have 3.4 billion people on lockdown. So think about that. That's an incredible number. and you have many industries that will not survive it in their current form. We wrote about this at wealthresearchgroup.com/QE and wealthresearchgroup.com/over. And in both of those reports, we talk about the unprecedented central bank and government intervention, and also about how industries are going to be impacted by this.
Paint a picture on the fallout from COVID-19 and how it's impacted the area where you live and your work, and how has your daily routine changed?
So on March 4th, I still went to a basketball game. This was before where I'm at noticed that that we have infected people. So they didn't start testing, etc. About 2 days later, on March 6th, they started to tell people begin to self-isolate, and the communication began. From March 8th, so for the past 3 weeks and a half, I've been quarantined in my residence. I can leave the house if I need to for pharmacy, supermarkets, but most people just deliver both to the house. Obviously, if you have kids, you can circle around the block or stuff like that, but don't go to the parks and anything like that. All non-essential businesses have been told to shrink to 15% of their capacity. If it's an office space, I mean, the rest should work from home. All restaurants and malls, etc., are closed. And no flights, no inbound and outgoing flights unless it's really, really essential, and that's going to change as well. And now they're also checking many more people. So and you can only leave the house with a mask and gloves, and that's also enforced by the police. Our unemployment rate, because people sign up for unemployment even if they're on unpaid leave, they haven't been fired, is 25% right now. And it went from 4% to 25% in 1 month. So basically, the way that the government allowed people to sign up for unemployment made it so that there's an incredible amount of unemployment numbers, and they're going to do an economic package. Here, they're talking about $20 billion in Israel, and now they're trying to make it bigger to where it's almost $40 billion. Nothing like the United States, but it's still something that, as a country that has tried to avoid debt and deficits. So in the Western world, we are one of the fastest growing, wealthiest countries, but it's hitting us very hard. And I would say, look, around the world, it's hitting everyone hard. And the end result of it would be this: if the country that you live in is, one, able to change quickly and adapt to this new world, that will be one measure that helps it. Two, how disciplined the population is throughout this time, because that's going to help these countries avoid a problem. Three, how dependent are they on tourism? If they can skip tourism, that they can literally shut that industry for many more months. Four, how disciplined are the elderly, and can the country look after them? And five, ingenuity and planning. So if these countries can really succeed in innovating with their solutions, that will be a big success. So whichever country starts to lead in flattening the curve plus getting back to work, that's probably going to be a model for other countries as well. This is uncharted territory. That's what's amazing about it. Like, no one knows exactly how to act.
Yeah, I mean, let's hope this all can be controlled and maintained. But one thing out of control, the Fed. I mean, without even an official recession being declared, the Fed has already slashed rates close to zero and printed trillions to support markets. Its balance sheet is already top 5 trillion and no end in sight. But
no end in sight.
Yeah. Lior, what do you make of the Fed's actions, and what can we expect in the months ahead as a result of their actions?
Yeah. So in a fiat monetary system, the disadvantage is that if the money supply is mismanaged, you run the risk of velocity of money and higher rates of inflation, and that has been exemplified in many countries since 1971 and even before we had a fiat monetary system. That's been exemplified even in gold standard era. So that's the disadvantage of a fiat monetary system. And the bigger disadvantage is that governments are able to run deficits that are well beyond the tax revenue that they receive. So those are the big disadvantages. Basically, every generation is unfairly born into debt. And so that's one thing. That's one problem that comes of it. The flip side of it, so the advantage of a fiat monetary system is that the central bank can react to disasters at a flick of a switch, right? You can literally inject money into the economy at whim, and you can give it to whoever you want. You can target it. What they've done wrong in 2008 is that they didn't target their QE or their policies to have any restrictions on them. So in other words, they lowered rates to zero. They started to bail out specific companies, and then they started buying assets. No restrictions, though. So what it created was a wealth gap because the rich enjoyed it more than the poor. It created inflated asset prices in some areas, which made it beneficial for those actors to continue doing what they're doing. And there was no, in the Obama years, there was no fiscal policy at all. Then comes along Trump, and he creates fiscal policy, but he doesn't change the restrictions on share buybacks or stuff like that. So what we're seeing now is what I like to call responsible or accountable stimulus. So if you are getting an advantage from this, there will be some restrictions, some regulations, some code of behavior that you'll need to adhere to. So that's one thing that's going to happen. And what we're seeing both is monetary and fiscal stimulus. So the risk is that the Fed is overshooting it, and that it's basically nationalizing some companies, or not nationalizing it, but it once it buys stocks, it creates a situation where it, as an entity that is mandated and lawfully allowed to create a money supply, now owns stocks. It's a unique situation. It owns bonds, it owns stocks, and then we need to remember that what it does by doing that, it stabilizes prices which may not need to be stabilized. In other words, it's a disruptor to the free market. The free market is not free in terms of there's only private individuals anymore in it. The new free markets are comprised of everyone: central banks, governments, and us as individuals. There is no free market in terms of bankruptcies are going to be more scarce. You're already seeing it because with zero interest rates, many companies can just roll over, and governments can roll over basically indefinitely. So what you're seeing is basically a punting of all of the disadvantages of a fiat monetary system, and all you're seeing is the advantages of it, which is that any crisis gets resolved pretty quickly. Right? If the Fed wouldn't have come in, for example, I know many people hate the Fed, right? But if it wouldn't have come in with QE and with everything that it's doing, then the ATMs would be shut, banks will be shut, markets will be closed, and there will be, in the streets, there will be like Los Angeles 1992. That's the flip side of what would have happened right now, because all the world at once wanted dollars, and since we live in a fractional reserve system, there are no dollars to be had when all the world rushes to it. So they would have had to stop redemptions, and that would have created even more panic. So that's That's the good side of having such a flexible system. The bad side of it is that who knows if they're overshooting or not. You cannot imagine that a board of, I don't know, 20 people plus a few thousand employees at the Fed, mostly economists and academics, can decide how much money is needed for the U.S. economy or for the world. That is an impossible mission. All they can do is be wrong in such a way that doesn't create a disaster. So as long as the average person doesn't wake up to the fact that his own government is mismanaging tax money and his money and everyone else's money, and there's not a real reset, and I don't think that there will be, because I just believe that people care more about, hey, I'm getting money, I'm getting $3,000. What do I care what is a QE program or what is a helicopter money? I know I'm getting $3,000. That's good enough for me. So the average person will never listen to an interview like this. He will never research this further. He will go to work and continue living his life and allow globalists to make big decisions for him. So, in other words, I don't think any new economic system is going to be birthed from this disaster. All I see is that the U.S. will have to manage what they've just done, which is unprecedented, in the right way, or that will cause in the next disaster something that can't be fixed, and without a jubilee or a reset or whatever you want to call it.
Okay, yeah, that you pretty much answered my next question. I was going to ask you, with all this money that the Fed is throwing, not just in the U.S. but all around the world,
Yeah.
is it going to be able to solve the problem, or were we going to be looking at some type of a reset? But I guess in your view, there won't be a reset.
I don't think there will be an immediate reset, no, because what they've done basically is to one, make sure that the credit markets are open, and they've done that, and they can pull back a lot of the liquidity. So basically, they've done something that saved our world from going into chaos. And then, secondly, what the government is doing is not so much stimulus. They're just putting enough money in people's pockets so that they don't go nuts. So that's the second part, and they're bailing out industries and companies that fell for this disaster, not for their lack of ability to be a good company, but because the government told them to shut down the business. And then thirdly, there's going to be an infrastructure program. The problem is, or the risk is, that with helicopter money, if you remember how they said in 2008, the entire working thesis was, well, the banks will lend money into the economy and then it will trickle down to Main Street, and that never happened. Now they've just went straight to Main Street, so the money is there at the average person's level, and now the question will be, will this create velocity of money and inflation in everyday items? What you saw from 2008 until 2020 was an inflation at the asset level, because this money was in the banking system, and with wealthy corporations and individuals, it basically inflated asset prices, because this company bought this real estate or this stock, and just this got real inflated. There were other inflationary pockets, but for the most part, you didn't see broad-based inflation where everything goes up, just everything. So that's the risk they're running right now, with running both monetary and fiscal at the same time. And therefore, the risk is not reflation, as we saw in 2008. It is inflation. It is real inflation. And that's something we haven't seen since the 70s. We'll see if that occurs now. And again, as an investor, as a business person, as an entrepreneur, as an employee, whatever you happen to be, your best tool is, one, diversification. And so you don't have to predict. Don't go all in on a script that you imagine will happen. Diversification, and then let opportunities come to you, because there are many opportunities right now. if you're ready for them. The best way to get ready for them is to make sure your income, your steady income, your active income is not drying up because of this. So if it is, you need to think about secondary ways of income and how to blast through this disaster, basically.
Okay, so but with all this money printing, I mean, do you see some sort of a day of reckoning that's going to unfold? I mean, I know you mentioned inflation, but some guys have been calling, I believe Doug Casey, Gerald Solente, they've been calling for deflation, but you're seeing inflation. But just to back up, are we going to have that day of reckoning from all this money printing?
The deflation already happened. What you saw with 35% down for the markets,
Yeah.
and with $12 trillion going into the US dollar, that was the super deflation. That was the most deflationary 2-week span in history. So, Patrick, because some people don't understand it, in a classic risk-off event, people sell stocks, buy bonds. What happened now is people sold stocks, sold bonds, went cash. All of the world went cash. $30 trillion evaporated. That is a super deflation. And we're basically bouncing off of it. Some people are saying we're going to deflate again and create some sort of a bottom. Some people are saying we already seen the bottom. We may not retest it, etc. But the deflationary boom, or not boom, the bust already happened. And now we're starting to reflate it and see how much of a reflation we have. Every time that we see an event like 2001, 2008, 2018, and 2020, those are day of reckonings, because left alone, without Fed intervention, they would cause a super deflation. And they would basically cause the end of our system. Our system is based on debt, and when it stops, when banks stop lending to corporations and to individuals and to mortgages and to governments, etc., that basically leaves in the system more debt than equity, and it's done. It's over. So that will never happen. The authorities will never allow that to happen. Okay? So whenever there's a panel like this, there's going to be a reflation. At one point, it could be that the population resists this sort of a bailout so much that they will decide to do something else. They will respond differently. There will be a global coordination on how to restructure debt, basically. But unless that happens, unless the political will is there to do that, you will always see the same sort of response, because that is how the system is built. On the flip side of that is another sort of day of reckoning, which is that inflation can run out of hand. The more likely scenario for the day of reckoning is that other countries decide, along with the United States, that the system cannot be bailed out once more when this next one happens, when this next big one happens, and they will have to create some sort of a new structure. Who knows what that structure will be? And you should not live your day-to-day life as if it's going to happen tomorrow. When it goes bust, you need to be, ready with diversification at all times. And if you can do that, then you will have a prosperous life under the fiat monetary system. That's the basic answer to this.
Yes, now we're wondering if that inflation is going to come into play, but there are some guys who feel that the time to build wealth is coming to an end, and it's now the time to protect wealth, given the extreme monetary policies that are coming out from central banks. What's your opinion on that?
It is always time to build wealth. Do not think that you need to protect your wealth in times that are hard. Always there are opportunities to build wealth. Now, as an investor, there are times when building wealth is more difficult than your set of capabilities allow you to. So, in other words, I'll give you an example. Private equity is right now probably drooling over the cruise ship industries because of their specific tax domiciles, that they're domiciled outside of the U.S. in order to avoid taxes with not avoid taxes, but lower their taxes with registering their ships in the Caribbean, etc. They're probably not going to go under the bailout program for the United States government. So that kind of an industry, that is a great industry, and it's not going to get bailout money, they probably will see a lot of private equity come in. Now, can you and I do that? Can you and I now go out and acquire cruise ships? No, right? You and I cannot. But $1 billion fund and other private equity groups, they can. There are always time. It's always a time to build wealth for those who can build it. If your certain capabilities are such that, for the most part, what you can do is either buy real estate or buy stocks, both vehicles that work better in growth times, then yes, this is not the best time to build wealth, because probably real estate and stocks are not going to boom because we are going through a period where there's millions and millions of people unemployed, and debt is going to be filtered, right? So if you mean, if by that you mean protect your wealth, then I agree that you need to find ways to lose less than other people. And that's important. As an entrepreneur or as an employee or as a business owner, this is definitely a time to build wealth, because if you can come up with solutions, there are so many people in trouble and having problems, that obviously this is a great time to build wealth, because you can help other people.
Yeah, hear you. Yeah, that was going to be again my next question. Where right now we're seeing some things that look dangerous, and we're seeing some things that look opportunistic. So I was just going to ask you, what do you see that looks to be more on the opportunistic side? And you mentioned cruise ships for one.
To me, what is opportunistic is something that I understand thoroughly, and that I don't have to dabble in order to realize if I'm right or wrong. So if I have any doubt about something, I just don't do it. And if I have a doubt as to whether or not the restaurant industry will come right back, because I think people will, love to go back into society and enjoy their lives again, as they did after, for example, World War II, where people just flocked back to society and basically try to make up for lost time. That is one speculation. Maybe the other speculation is that they don't want to touch each other. They don't want to go back to. So if I have a doubt as to how people will act in a certain industry, I just don't deal with it. Okay. So that's my first idea. If I don't have to take that risk, then I shouldn't take that risk. And remember, Patrick, the S&P 500 has returned 8% per year on average for the past 100 years. Out of those 100 years, only 4 years that are really return 8%. In other words, most years it's either hot water or ice water, and it just averages at 8. But most years these are 20%, 15%, minus 10, etc. So if you do not have the ability to handle the volatility and the expertise involved with owning equities, then you're probably just better off diversifying between cash, precious metals, stocks, real estate, etc., and not looking for specific opportunities. If you have a keen eye and a commercial eye, then you can think of ways of either opening a business that will work well in these times, or a joint venture. Or if you do not think that that's the right way to go, and your career is not in an industry or in a company that you feel you can just climb until you reach high pay grades, that you need to think about either one, changing your career, or two, having a secondary income. Yeah. So those are the two strategies that you can take here. So the most important thing to remember is, with investments, if you don't come to them with a high degree of capital initially, they cannot replace your active income, and that should be your top priority in your life. If you do have a high degree of capital to deploy, then obviously after what we've just seen, there are more opportunities than before because we just saw equity evaporate. So that's basically my answer to you. As to specific opportunities, I think with the Wealth Research newsletter, that's when we feature specific opportunities, even opportunities that I personally invest in. I will say that if you go to wealthresearch.com/gold playbook, that's the most comprehensive gold manual online. And I did write a lot about how bullish I am on gold right now. I think silver is very interesting because of the reflation and the basically getting back to capacity at some point. That will very much be a good thing for silver, especially because 25% of the world's mines are getting shut down right now. So because they're in areas that have the virus, so that's going to be putting a lot of pressure on supplies. And lastly, yeah, I would say that is one of the most important things to keep in mind, Patrick. The supply constraints, especially with oil at $20 a barrel.
Gold and silver. I guess we'll talk about that for a bit.
Sure.
You mentioned that in your newsletter, in your reports, and but have you noticed an increase in the interest in precious metals from the people around you? Have they asked you what's going on with the gold and silver market? What have you said to them?
There's been so many interesting things with gold and silver that it's unbelievable, Patrick. As a bullion dealer, you should know. In the United States, when I made my rounds, some bullion dealers told me that they cannot process orders that are over $25,000. Where usually when I call, they would ask me, Lior, can we do this 50K or 100K? They would go, they would try to upsell you. Now they try to downsell you. Because they can't facilitate the order. The premiums are insane. Gold is selling for $2,200 at some point, even for the Eagles and the Maples, with a 2-month delay on delivery. Silver, I've seen it sold for 25, 30, even 40 online. And that's before I'm telling you that mines are getting shut down throughout the world. Remember, New York, London, Switzerland, and Hong Kong, the 4 hubs of physical delivery for gold and silver, are on lockdowns, quarantines, etc. Big problems. So that's a unique environment in itself. And then couple that with the fact that the demand is exploding, literally exploding right now. Some bullion dealers are telling me that they've had more orders in March than in the last quarter of 2019 altogether, and some even more. So that's another thing that's important to understand. And then lastly, and I think that's really important, is that, look, silver is displaying itself as an industrial metal, more so than a precious metal right now. It doesn't have the premium attached to it that gold does. So the gold-silver ratio, if you go to wealthresearch.com/ratio, we wrote a lot about this discrepancy. It's like 110 or 120 to 1 between gold and silver. And what will happen very soon is that in China, the world's largest buyer of gold, people will move out of quarantine. They will start buying gold again. Industries will start to open. Silver will start having a lot of demand, industrial demand again. And I think what you'll start to see when inflation goes higher, because it isn't in the incentive of Washington and of the central bank, meaning the Fed, to have a weaker dollar, because a strong dollar is basically the deflationary problem. So they both want a weaker dollar, and I think that is going to play really good for silver. So I'm very bullish on both. To me, gold will hit a COMEX or spot price all-time high within the next cycle, for sure. In other words, within the next reflationary cycle, so within the next 2 years. And silver can really close that gap to gold to about 65 to 1. So compared to what we're seeing right now, that's a great move for silver.
Yeah, completely agree with that. But what are you telling people so far as how much percentage should people be holding gold, silver in their portfolios? Most guys just say 5 to 10%. But what's your opinion?
So one thing is I don't tell other people what to do. I can tell you what I'm doing with my own finances. With gold and silver, physical, what I've done is I've taken 2 years worth of my burn rate, my lifestyle burn rate, and I've converted them into gold and silver. 80% gold, 20% silver. So in other words, I've taken whatever my family spends in 1 month. Let's say, for example, it's $10,000. So I've taken $240,000 and converted that fiat into physical gold and silver. That is my allocation into the physical gold and silver world. For my own purposes, I never sell it, right? And that's just another means of saving it. So that's one thing. On top of that, if I wish to trade or speculate, what I love to do is either use the royalty companies or the silver options. Those are one is the safest, and in my opinion, the royalty companies. Second is the most volatile and lucrative, the silver options. So if you know what you're doing, those are great vehicles, and we wrote about them a lot at wealthresearchtube.com. For example, for wealthresearchtube.com/gold playbook. But we also are doing a special report in the next coming days. So if you're a subscriber to the newsletter, you can see some of the things that I'm putting together with my own funds, and I will be sharing. And then lastly, if you think about how the mining companies will react to this, think about this. Mining companies usually rally when the general traditional businesses are not, okay? So when the tech companies are struggling and traditional industry is struggling, mining companies get much more attention. And that's what's going to happen in the months ahead. Because of low oil prices and low labor prices, their margins are going up. And with mines shutting down, that is great for a speculative opportunity. So definitely that's something that I'm very bullish on. But with that, I only speculate with 10% of my net worth at any given time. And with each speculation, I have a couple of things that I do. One is proper position sizing. So every speculative bet is only 1.5% of my net worth. And I put a 30% stop loss. So in other words, if I badly time something and I have, let's say, $1 million that is the net worth, then 1.5% is $15,000. And if you put a 40% stop loss in there, then you are only risking $6,000. So think about that, because that is what's going to help you to determine, hey, I've done this 3 times or 4 times. I've called badly 4 times in this sector. Why should I even continue, right? So that will help you avoid catastrophic risk. What happens with most people is they say, I'll go all in because I want to make a fortune. And then they once they see their fortune lost 40%, they can't take the next step to say, oh my God, I'm so wrong here and I should probably be selling, but I can't sell because I already lost. I want to make it up. And that kind of a bias is working against you. Like I said, you become rich as an investor by 2 things: time and initial capital. If you cannot bring your regular career to dump a load into your investment portfolio, then you need time. That's the 2 main features here: time and capital. The more capital, the less time you need. The less capital, the more time you need to let it compound.
You mentioned the upside of silver, but also the upside of gold. So I guess just gotta ask, if you were to walk into a gold and silver shop and you only were buying one of the 2 metals, which one are you walking out with?
I'd say silver.
Silver.
Because of oil prices. Oil prices and silver correlate almost 100%. Please plot the past 30 years for oil and silver, and you see that they trade together. They basically trade in tandem. So right now, oil is the cheapest it's been since 2002, if I'm not mistaken, and it is set to rebound. When it rebounds, silver will rebound. That's the short answer according to history. And that's my opinion. You should do your own research on this, but at least in my opinion, that's the way to go. And if you're asking me gold, silver, or mining stocks, then I would say that there will be a great opportunity with specific mining stocks, in my opinion, because the traditional industries are going to have shrinking earning margins, while the mining industry will have increasing earning margins, at least for the next year or so.
Okay, it's a lot of info. Lior Gantz, before we wrap up, can you let our listeners know more about your work and the Wealth Research Group?
Sure. So wealthresearchgroup.com is the free financial newsletter. That's the best way to be updated with what we're doing. And obviously, the special reports tab on the top is where all the PDF reports are projected, and you can easily access all of them and enjoy them.
Okay, Lior Gantz, we thank you for coming on the show. I thank you for going over so many diverse topics. We appreciate that, and I'm sure the viewers will take in a lot of that information and head over to Wealth Research Group.
Thank you, Patrick.
That was Lior Gantz, founder of the Wealth Research Group. For more of his insights on precious metals and the global economy, please visit his website, wealthresearchgroup.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.